Hi everyone again. While we are starting the streaming, can anyone tell me what their preference is? Is it good to have a separate stream for each lecture so that all those streams will be available later on YouTube as separate lectures? Does it cause you a lot of difficulty to switch between the streams? Or is it probably better to have one like 4-hour streams? My personal preference, I managed to switch between the streams now. Let me see. Let me see if the quality is all right. Okay, balance sheet. Today's topic is balance sheet. Tell me please. Tell me please if you can manage to switch between Tell me please if you can manage to switch between the streams. As you can remember, during the past week, we ended up at the accounting equation, and we did some balance sheet exercise as well during the week. Today is the main day for the balance sheet, and we try to do that as long as possible. I planned half an hour for it, and you will probably have to do some self-study, but as of today we already learned something about balance sheet. So let's go to MIT lecture 2. In this lecture, they cover balance sheet fundamentals. They did some insights into overall financial reporting. We already did that. If you want to repeat, you can check that with the lectures. You can Google any, if the term is unfamiliar to you, you can just Google it. So let's move to the balance sheet. And let's open some real balance sheet. IMC. I was asked a question recently about like a negative equity. So I went to AMC Theaters, and we have a quarterly reporting here. And I would open HTML. So here I just want to show you the real balance sheet. Okay, so that is an income statement. And here is the balance sheet. You see we have assets. So we already know what assets are. They also have liabilities and stockholders equity as a other part of the balance sheet. So here we have liabilities. So total liabilities. And we also got here total. So that's total for everything. And we want total IMC stockholders deficit. So that is an IMC equity. And if you see, it's negative. So that's the structure of the balance sheet of almost every company. And balance sheets differ pretty little. And that's because there are accounting standards regulating that. What do we usually see on the balance sheet? Cash and cash equivalents, restricted cash, which is cash in bank, but somehow restricted, but not a deposit or certificate of deposit. So restricted cash is some cash which you cannot use. It's usually used as a collateral for something. Accounts receivable, other current assets, which can be basically anything if it's current, if it's due within less than 12 months. We have property, net of depreciation. We have operating lease right of use assets. That's a specific assets which was created by the recent changes in the lease standards. Let's not pay much attention to it right now. Intangible assets. We know what is an intangible asset. Goodwill, deferred tax assets, that it's tax related, not too early for us to deal with that, and others. If you check with what we have just learned here in the previous stream, you will see that we matched like 80% of the accounts. Goodwill, intangible assets, property, plant and equipment, prepaids, which are like other receivables, inventories, cash, accounts receivables. So we are pretty much on target with what we are doing. What's important to know? What is an important knowledge from the previous lectures regarding the balance sheet? Let's see. Assets. You can remember definition of the assets from the previous lecture. It is probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or events. It's a bit complicated definition. You can simplify it for yourself. So any assets is something you can benefit from. So it can bring you cash at the end of the day. So economic benefits, I would say, to simplify, economic benefits is like a current or future cash inflow. You kind of get benefits, you get value, you get cash. And you should have control over that asset. You should be able to extract that value from that asset. If it's someone else's asset and you have no control over it, you have to you do not keep it on your books. You do not have it on your balance sheet. The types of assets you own depend on the nature of your business. That's I think is obvious. Current assets. Current assets are the ones which have a maturity of less than 12 months. So you kind of expect to be able to access the cash from that assets within the next 12 months. For the cash, it's like almost immediate. For accounts receivable, you probably have to wait 10-30 days. For some prepaids, it can be months. If you prepaid 1 year of insurance, all 1 year of prepayment will be current assets. But if you prepaid 2 years of insurance, just 2, the first one will be current assets, the first year of prepayment, and the second year of prepayment will be non-current asset. And here is a list of sorted expenses. And they also have operating cycle concept here. It's more managerial stuff rather than accounting stuff. But the operating cycle says basically that first you need to pay cash for inventory. You need to buy inventory. Then you transform that inventory from raw material to finished goods. Sometimes you do not transform, but still you have to sell that inventory. So the sale occurs here. And then it is not always that you get cash immediately when you sell something. You can sell something on credit or on account, and you will have to wait until you collect the cash. So that's what operating cycle is. On the entry, you can be asked that question about operating cycle on a job entry to entry positions. It's just like probably a general job questions on the entry position. If you are a recent graduate, they will ask you stuff like that. The whole thing is also called working capital. So you would prefer to have as little working capital as possible, like to owe, you want to owe a lot to vendors and to have as little as possible accounts receivable. That way you got a lot of cash to be able to finance your operations, and you do not need to invest your own money into operation or to borrow funds to invest in operation. So that's on operating cycle. Long-term investments. These are the investments which you held for more than 12 months, and we will not, you can read about that in that lecture. It's currently a bit outside of the scope of today's lecture to dig into long-term investments. Property, plant, and equipment. These are the assets of durable nature, usually more than 12 months, which you will use in the production of sales of goods or rendering of services. Property, plant, and equipment is not something you intend to resell. It is you plan to use it solely for production, and it is kind of you will use it for several times over, or for many times over your operating cycle. So it is not something which is transformed into finished product immediately. So basically it's equipment. If you are in a trucking business, truck is your property, plant, and equipment. And maybe if you have your own garage, your garage is also your property, plant, and equipment, which if you use it for business. If you have equipment in the garage, which you use in the trucking business, it's also property, plant, and equipment. But if it's like an oil, which you use for the truck, the oil will be like a raw material or supply. So it will be not property, plant, and equipment. And of course, land is a part of that. We came through that when we were studying accounting operations. So same with intangible assets. Your assets can be tangible and they also can be intangible. And most of the time, those intangible assets are non-current, like goodwill, trademarks, patents, copyrights. Goodwill is an interesting concept. If you want to learn more about that, you can Google that. Not a subject of discussion today. Accounts receivable. Accounts receivable are not considered an intangible asset. They are tangible assets. Because that's just a convention for accounting. It kind of feels an intangibles, but it's a real debt. It's some money someone owes you. So it's a tangible asset. Cash, even in the form of on the bank account, is also a tangible asset. Intangible assets are carried on the balance sheet as cost less accumulated amortization. So both property, plant, and equipment. So property, plant, and equipment is depreciated. It depreciates, and intangible assets, it is being amortized. So they lose their value with time. They lose their value with time, and that value goes to the expenses. In one of the following discussions, we will amortize our assets on the balance sheet. The general rule: you amortize property. You determine the useful life of the property based on your accounting judgment. It can be 3 years, 5 years, 10 years, 15 years. And that's only for accounting purposes. Taxation is different from that. So you determine that and you amortize it ratably over that period of time. But there are also other methods of amortization which you can learn about if you are interested in that. Cost. So cost of the property, plant, and equipment and intangible assets, it's whatever you paid for it. Whatever you paid to acquire an asset plus if you remember from the homework, we also include, if it's a tangible assets, let's see if it has, if it's a tangible assets, we include a cost of transportation to the operating site, and we include a cost of installation or work needed to bring the equipment to the working condition. Liabilities. Liabilities are future economic sacrifices arising from present obligations of a particular entity to transfer assets or provide services to other entities in the future as a result of past transactions or events. So what is a liability? It is a current obligation to pay someone cash, or to provide someone with services, or to transfer to someone some other assets. It's basically so when you feel, based on your common sense, that you owe someone something, that's most of the time that will be a liability. If you owe money as a liability as a result of past transaction or event, so if you signed a note that you owned someone, if you borrowed money from someone and you signed a note that you owe them, then you owe them money, and that's a liability. If you borrow money from someone and you say, okay, if you take money from someone and you say, I will do services for you, I will fix your roof, then it's already a liability. It is a prepaid receipt, or it's a deferred revenue. If you are in a roof business, if you are fixing roof for a living, and you take money for something to fix a roof, you will debit cash, credit, prepaid receipt, or deferred revenue. And then when you actually fix the roof, you will release that liability. You will debit prepaid receipt, and you will credit revenue. That's how deferred revenue works. Same principle as with assets applied to current and non-current liabilities. If something is expected to be paid within 12 months, then it's a current liability on the balance sheet. If it's more than 12 months, it's a long term. And as you can see here, they say that current portion of long-term debts are classified as current liabilities. If you remember an exercise from our homework about the mortgage, we were not asked to put in a current part of the mortgage, but I did it anyways, because mortgage always, if you pay it ratably over several years, it will always have a current part. Also, they say that if you plan to refinance short-term debt with a long-term debt, you can present it as a long-term debt. However, it is not that straightforward, and you need to meet, if I remember that correctly, you need to meet certain conditions to be able to do that. It is not just purely an expectation. Long-term liabilities. When you plan to pay them over 1 year, usually many debts like a leasing, mortgages, bank loans, they will have a long-term part too. And the last one is stockholders equity, the equity. They say here that's the residual interest in the assets that remain after deducting the liabilities. So equity is equal assets minus liabilities. We already know that from the accounting equation. Also, equity is kind of a cumulative contributed capital into the company, less dividends distributed, plus or minus retained earnings and losses. So basically what your net investment into the business is over the time, plus or minus your accumulated profits and losses over the history of the business. So contributed capital, we covered that. Retained earnings. So retained earnings is a measure of undistributed profits of a business. So basically it's your accumulated profits and losses from the beginning of your business through all the time you owned that business. When you do a dividend, the dividend will decrease. So when you pay out a dividend, it will decrease your retained earnings. So yeah, they gave you that definition. Change, how does it change over time? It is interesting that retained earnings on your balance sheet, you usually update your balance sheet with retained earnings at the end of the accounting period. So you, for example, you have retained earnings at the beginning of the period, you have profit for the period, and then you add this profit to the retained earnings at the end of the next period. And that way you earn profits and your retained earnings grow over time. Okay, that's an accounting equation or balance sheet equation. We already covered that. We covered how to identify assets and liabilities. Should we recognize the asset? Okay, let's take a look what they have here. What time do we have? We have about 10 minutes. 12 million check to an insurance company for liability insurance. That's an asset. 500k checks as a deposit on a custom-built machine. That's an asset. Buy stock in another firm. An asset. Chemicals as raw materials. Raw material is an asset. So you can do that exercise yourself. I remember we came through that on one of our previous Q&As, so I will not be repeating that again. And let's move, and that's accounting equation part. Let me explain what we do next in terms of balance sheet and homework. So that's basically the structure of the balance sheet. So if we go to the homework file, you will have transaction accounting equation tab there, and we already copied some of the accounting equations. I showed you how to copy it here. So this is someone else's file, and okay. So how to practice balance sheet and accounting equation? First, we copy the header to your new homework file, and then you fill that accounting equation in with transactions from transaction list. You can practice whatever amount is okay for you, based up to the point when you feel that you are comfortable with the accounting equation. And same with the balance sheet. So you currently have blanks on the balance sheet, but you have trial balance, and you need to go to my file, copy. You can try to copy whole thing like here. Let's see what happens. Okay, it even copied the formulas, so you can get something out of it. It doesn't balance. That will be your next homework. I have a video. I have a separate video how to do a balance sheet. I will update it I will put the link here, and I will send an email about homework. And the homework will be to practice accounting equation as long as you can, and then practice, try to balance the balance sheet. And to balance the balance sheet, you will need to kind of update your trial balance first. That might be a bit complicated because some formulas are involved. I will do some instructions later on that. We are currently running out of time on the balance sheet. If you got any questions on the balance sheet, you can post them here. You can post them in the Q&A. I see I've got one more question in the Q&A. And if you still got any questions on the balance sheet, you can ask me in the chat or individually. Sorry for background noise. I'm doing a translation from home, so I've got some background noises here. So we will finalize the creation of the balance sheet on the homework. Thanks everyone for joining the balance sheet session. I hope you've already done, if you have not already done the homework, so you can see in the MIT materials how they did the accounting equation. I also did a video how I do that in the working files. And they also, for someone who hasn't done the homework yet, here was the previous homework. It's done in my file and in several other people's file, but you can redo that for your own understanding. With that, I'm concluding the balance sheet session. I should have probably allocated a bit more time for it, and we will switch to the income statement session, which will be completely new for us. If you go to the MIT sessions here, I will post a link here, and you can open lecture number 3, income statement and principles of accounting, and we will start working on that. Okay, they repeat. We will start working on that on the next stream. With that, I end that stream, and I will share the links, and we will meet again in about 5 minutes on the stream. Thank you. Have a great day. Thanks for coming. See you on the next stream.